Through the past 10 years that I've been in and out of China, you see a lot of factories now opening facilities outside of China, in Vietnam and in the Philippines, as well as American businesses now shifting production outside of China. And this has been a continuous trend that is now sparked by these trade tariffs.
Greg, so here's what I wonder. In the short term, who knows? I'd love your thinking on what you think is happening maybe this weekend with the tariffs. They've gone into effect. I thought the market would have reacted more strongly to that. It's kind of shrugging it off. Is that because this round of tariffs is already priced into the market, or do they think it's a story that'll play out over the long run?
A bit of both, Kelly. I mean, if you look over the last year, as all these protectionist developments have unfolded, not just with China, but on steel and autos and so forth, the market takes a beating and then comes back because the underlying growth of the U.S. economy is the dominant factor. So I think that's still the case here. Even if the tariffs are allowed to sort of take effect, as the president said today, the effect on U.S. growth is probably at most 0.2 to 0.4 of GDP. Which is not good, but it's not overwhelming. At the same time, I think, as you say, there continues to be this hope that there will be a solution. I mean, right from the beginning, we've known there are very intense incentives on both sides to get this deal done. That's still true. But it's not encouraging that you see these talks wrapped up so early today. And also, I think that what we've learned in the last week is that we're starting to push up against some of China's own red lines with respect to violating their own sovereignty. And so I'd say, although my own bet is that we still get a deal, I have a little bit less conviction about that than I did a few weeks ago. Okay,
so Dan, let me come to you on that. It's also, we heard Derek Scissors of AEI say this, that the U.S. is simply asking China to do something it won't do. It won't admit that it's been stealing IP, and frankly, it won't agree to any substantive changes on that front. If so, are we right to walk away from a potential deal? Are you worried that we might actually sign one that has no real teeth?
Well, I agree. We have serious complaints against China in intellectual property and how they handle foreign investment there. But these tariffs that the president is imposing are all out of proportion to anything the Chinese have done. They're inflicting pain on innocent bystanders. You know, the tariffs are doing more damage to the U.S. economy than anything the Chinese government has done. These latest round of tariffs are going to start pinching on consumer goods, furniture, and clothing. That's going to take money out of the pockets of millions of Americans. Well, we just heard about supply chains being disrupted, costs going up for U.S. business. And of course, the Chinese are going to retaliate, and that's going to mean even less market share for U.S. farmers, for U.S. companies that export to China, which is our third largest export market, or at least was until the tariff war. There has to be a better way than this, and there is.
So, Nathan, that's why I'm curious what you're seeing playing out across the business world, because the one way to avoid the outcome that Dan is talking about is to simply source the goods elsewhere. The problem is it's not so simple. So when companies do that, are the costs going up? Is the quality going down? How does that work?
Definitely. I mean, I want to paint the whole picture here. You know, really, the businesses that are really getting affected are the millions of medium and small businesses that are fueled through the e-commerce platforms like Shopify and Amazon. And those two companies have been doing exceptionally well this year. But these, small, medium-sized businesses that are fueled through these platforms, they don't have the capabilities like larger Fortune 500s to shift production outside of China as fast. And so they're getting greatly affected, which is going to impact a lot of the jobs in America, as well as if you look at social media platforms like Facebook or Pinterest, these companies, to acquire new customers, they spend money on those platforms to acquire new customers. And so when they don't have a big enough margin to acquire those customers, it's going to decrease their ad spend budgets and really have a greater effect across the whole economy.
Yeah, that's interesting, especially like you said, a lot of those e-commerce platforms that have been so crucial for small businesses. So, Dan, if tariffs aren't a good tool, what are some better options? We've heard sanctions being suggested, export controls, which would forbid American companies from doing business in China. That, of course, would have its own collateral damage to the economy.
Well, I think there's two broad tools in our toolkit that we've used to good effect. And one is to work with our allies to bring cases in the World Trade Organization. China has been taken to the WTO more than 20 times by the United States. And every time China has moved in a market reform direction. Unfortunately, we've kind of antagonized some of our allies in that front. But also, Kelly, specific legal action. And our Justice Department has done this against companies like Huawei and others Chinese agents that are stealing intellectual property, going after those particular agents over there that are violating intellectual property instead of these broad trade wars, which are punishing millions of people that have nothing to do with this in China and the United States.